Please read this disclaimer carefully before proceeding further. Welcome traders to analysis of dollar index. Thanks for joining me here. My name is Vic. Let's start with the dollar because we know the importance of dollar. So far everything is dependent directly or indirectly on dollar. So we always start our weekly analysis with dollar. I'm going to actually do this thing little differently this week. I'm going to actually start from top down analysis. So this is going to be quite an educational analysis. So make sure that you watch it till the end if you're interested in learning about how I use my technique, my FCP technique, Fibonacci confluence pattern technique. And I'll try to show you exactly what I do, but if you're interested in learning more about FCP technique, then you can head over to Vikinsa.com, and under the training section you should be able to see a brochure, and this is how the training curriculum looks like. You'll be able to find further information in this brochure, which is available on Vikinsa.com. Alright, so let's start with dollar. So what has happened so far? Let's look at that. So we are looking at the monthly time frame right now, and first of all we'll see what has happened in the past week, and then we'll go back and reset the entire analysis and start from scratch. Okay, so in the past week, as we mentioned in the previous week's analysis, I was expecting market to actually print a bullish candle, which has happened, and I was able to predict that based on the candlestick pattern that is developing here. And right now this is also telling me that it can actually keep on moving further up. But remember, I also mentioned that because of this candlestick and because of this candlestick pattern that we have, the market may actually print a bear candle by end of this month. So that is a possibility. It may or may not happen depending on where this candle is going to go to, but it may actually come back down as a bear candle. So you have to be very careful. So if the dollar index starts to go up, do not take that as as a guaranteed upward movement as of now, because towards the end of month it can actually come back down and complete that as a bear candle. Okay, so there you need to be careful with that. But ultimately I'm expecting dollar to reach somewhere around 96 level, 95, 96 level, and if that is broken, then I'm expecting it to go higher, and we'll see that in a second why I expect that. Okay, so let's look at the weekly time frame. This is what we have. We had a rejection, a nice rejection, and if you remember, in our Telegram group and other places, I've been mentioning for weeks, and actually not weeks but months, that 89.89 is the critical level for dollar index, and so far it has not been able to close below 89.89. that level has been absolutely critical for it, and that's why the market actually fell down a little bit, tried to create a bear trap for most of the people, because you see everywhere you will go these days, especially on cryptocurrency forums and other places, the entire basis of them is the dollar is getting weaker. But I do not see that happening actually. I'll show you what I mean by that. I might be wrong, it's just my opinion, but I'll show you exactly what I mean by that when we do the top-down analysis. But here 89.89 was a critical level, and that has been held so far. We'll come to know by the end of this month whether this actually is going to close below that level or not. If it closes below that level, then we'll have to see where it can go down to. Okay, but for now the dollar looks like it is trying to make a comeback, and that's what I mentioned last week as well. Okay, so let's go and look at the previous analysis. This is how it was looking. So we have a lot of gaps available here. So there was one gap here which has been filled. There is another one which is coming up, so market could be heading towards that. There is another one which is coming up near about 91.937 level, so market could be heading there as well. So all of these are working out nicely, but we are going to reset that analysis. Let's do that actually right now. Let's clean this up, and let's go to the 12-month time frame and see what we can look here. So let me bring in what a cluster, and what we can see that the Bollinger Bands have started to squeeze a little bit, and they may take few years to show their effect, but they have started to squeeze, which basically means, like, for a few years the dollar is going to, like, go sideways. It has already been going sideways, and if you think, like, the dollar has been losing its strength, then you see that, in the past 1 year it has fallen down and printed this candle, bearish candle, obviously, and this is similar to what we had before, similar in size what we had here, similar here. And if this is, like, bearish for you, then these are even more bearish for you. So you see, you need to put things in their perspective. Now let's start putting some lines here. So these levels are going to be very, very important for dollar, and that's what we got from 12-month time frame. Let's go to the monthly time frame, and what we see here is that market has started to go upwards from here, and this level is going to be very important here, where we have what, a moving average. And let's start by looking at the whole structure. Okay, so what we can see now is that market has created this W pattern here, which I've been repeating in past few analysis actually. So if I draw Fibonacci on it, this has come to 61.8 here, and this has come to 50%, this is 50%, and this is right now 38.2, right? And let's look at this. Now what you will notice that it has actually touched the midpoint of this W pattern, has touched 38.2, which basically means that it is expected to come to 78.6 at some point in time. So if the dollar starts to move up, and if it picks up momentum, then it can go all the way to 109 as well. That's a possibility. Anything can happen in the market, so that's a possibility. If dollar can fall like this, it can rise like that as well. And similar sort of thing happened here, similar sort of thing is happening here. You see, if I draw your attention to this structure right here, you will notice very similar structure, this and this. They are similar structure. You see, huge move down, little shallow correction, then fall back down, huge move down, little shallow correction, then move down. And what happened after that? You see, the market created a bullish candle, then bearish candle, and then it started to shoot up. Same thing can happen as well. So this can actually keep on happening, because right now what you can see is that dollar is actually in consolidation. So it will, if it has come to the lower range, then it can move to the medium range, which is going to be around here, and the higher range is going to be somewhere around here. And that is why that 95 level, 95 to 96 level is important, because that is kind of like in the mid of this entire range that we have got. So that's a possibility. Okay, so it can move there. Now what we can see, that the market has created this M structure here as well, which basically means that if I draw Fib on it, then it can come to certain Fibonacci levels. So let's put those levels here as well. I'm going to change the color of them because they are now on lower structure. So these levels are important. So okay, and if I draw Fib on this, you see the market has completed that M pattern, FCP pattern here, and that's why it is expected to move higher. It has just completed right at that Fibonacci level. But if it starts to fall down, then we have another level right there. And let's bring in water cluster. Okay, let's remove these Fibonacci from here. Okay, so what do we have here? The market may start to move up to come to 91.38 level or so. 91 point, actually it's let me go deeper in there. It's 91.14 or 91.2, you can say. It can reach there as well. Okay, and if I draw Fib on this leg, that coincides very nicely with 38.2, so that looks like a very good one. And this is also 61.8, so we have a zone here, and then we have a zone here, DXY. And then we have a zone here. Okay. And what we need to do is remove this, go to the weekly time frame, and now we can see even better things, because now we have another level to watch out for, which is going to be this one and this. Okay, and if I draw fib on this leg, this is 61.8, 78.6, perfect. Yeah. So what I'm trying to do is basically trying to find the confluence, right? Because in our strategy, what we do is actually we look for Fibonacci, important Fibonacci levels confluencing with other factors. Our entire strategy is based on the Fibonacci, but we need to increase the probability of our setup using the confluence with other factors. And when multiple Fibonacci ratios line up in close proximity, that's what we call as FCP zone, Fibonacci confluence pattern zone. And these are high probability zones where the market is expected to come, because they try to attract the price towards them, and once the price reaches them, they try to repel the price as well. They try to push the price away from them as well. So they act as both support and resistance zones as per se. So the market may actually go upwards from here. So let's look at the daily time frame. On daily time frame, this is what we have. Okay, let's bring in those things here. And we have another level right there. Okay, when you're drawing Fibonacci ratios and these sort of things, you will notice that market automatically lines up very good Fibonacci levels with them on all the time frames. So this is 61.8, this is 78.6, and right now we are at 38.2, which is about to get broken, because if you see what's happening right now is that market is creating a W pattern and the midpoint is about to get broken, so it can actually start to move higher. Now once it has started to move higher, obviously there'll be a new structure, and we will have to update this analysis. But the dollar may actually start to move to this level, followed by this one. Okay, remember what I mentioned before, that at some point in time it can actually start fall back down and complete as a bear candle this month. So you have to be very, very careful how it actually is going to move upwards. At each of these levels you should be careful how the market is reacting. If it starts to go down, it can actually fall back down and completely reverse the previous gains. So this is what we have. If we go to the 4-hour time frame, you see what has happened is that the market has come to 200 moving average, which is right there, and it got pushed back down. Now it has actually overcome that, so it is trying to go upwards, and these are the levels that we are looking at. Now if the market starts to fall down, which it can, because we have this W pattern here as well. So if I draw fib on it, this is 78.6, so this is a minor zone here, and this is a good level right here. Okay, so the way we are going to look at it is, if you're looking to go long on dollar, then you should be watchful of this 90.84 level, and after that 90.938. At all of these levels you should monitor your positions, because at any point in time it can actually start to fall, because these levels will act as resistance, but once they have been broken they will start to act as support. So this is what we have. Now before we actually leave this there, let's also look at Water and Visage. Now Water and Visage is a suite of indicators which actually tell you about the market conditions. They can tell you well in advance whether the trend is about to shift. They can also actually tell you what is the best time to enter the market or exit the market. So if you're interested in Water and Visage, go to vikinsa.com or let us know in our Telegram group. So what we can see here is that if I go to the monthly time frame, the water and visage is actually telling that we are still bearish, because the trend line, this not the trend line but water curve here, the middle line here is actually red at the moment, and the value of that is near about 95.47. What usually happens is that if whenever the market actually goes further away from this curve line, it tries to come back to it, and right now it is very very far away. So what can happen is that whenever the market starts to pick up some momentum, it can come back towards it, which is going to be near about 95 to 96 area, and that is also supported by the analysis that we have performed. Now if you go to the weekly time frame, it is already telling us, it has already given us an indication that market trend is shifting it, because the color at the bottom of water trend has shifted from red to blue. That's very simple to note. That's the first step. The second step is that color has changed on water wave from red to blue. That is telling me that it is turning blue, it is turning bullish now on weekly time frame. However, the market may come down, back down, and there can be ups and downs here, but the trend is already shifting, and that is evident here on weekly time frame. If I go to the daily time frame, what we can see that the market has already been bullish here, since we got the color change here and the water arrow telling that the market was expected to come to this white dot. Now what is the significance of white dot here? The white dot is telling us the possible profit target. So if you had taken let's say long trade on the color change right here, or on the close of this candle where the arrow appeared, this would have been your guidance profit target, and you see the market has near about reached that level, and because we have water curve right there, there may be a pushback down, and that's quite possible because the water curve also acts as support and resistance, or dynamic support and resistance. So once this water curve has been overtaken, once the market has broken through it and performed a retest, then it is going to go even bigger bullish mode. If I go to the 4-hour time frame right now, what we can see that the market has been bullish, and since then it has been going upwards, and right now it has created this W pattern, which is quite evident by using this water wave. It actually tells very nicely that you have a W pattern here, and that is why the market is expected to fall down a little bit, and that is quite consistent with what we saw just right there. The market has come to water curve, which is going to act as dynamic resistance, and that's why it is supposed to fall down. So if I go back to 1-hour time frame, we can expect it to fall down unless market picks up huge strength, and then it turns into extended W pattern. Now if I go to the 1-hour time frame, we can see that the market is still bullish, but because the market has come onto the right side of this water wave, so far it has been on the left side, which is a stronger bullish sign. Once the market has started to come onto the right side of the water wave, that's where it starts to turn into a little weaker trend, I would say. So what we can do is we can wait for water trend here at the bottom to turn to red. Once it has turned into red, and once the water wave has also turned into red here, then we can look for aggressive or non-aggressive short entries. And you can see the W pattern that we saw on 4-hour time frame, that is very nicely defined here. So what we can do is we can go to the lower time frame, and if we find an opportunity to go short, we can do that. And if you do not even want to trade DXY using this, you can still make use of this analysis while looking at other pairs such as Euro USD, AUD USD, GBP USD, anything which is based on USD which can be impacted by USD. You can still look at them and make use of this analysis. However, this works best if you're using it with some analysis, you can make use of it for entering the market, exiting the market, and assessing the overall trend direction as well. We need to actually look at the bear side of it as well. So let's start looking into that. So if the market actually starts to fall, so near about this level is very important for us, and of course this level, because that's a median. Okay, now before we actually leave this there, let me show you another thing which is happening, because not everybody is using this sort of strategy. They use a trend line based strategy as well. So this is what I posted in our Telegram group as well. So you see what's happening is that market has created this sort of wedge pattern or triangle pattern, if you want to call that, and here the market is trying to, it has actually broken through the lower one and now it is moving towards the upper one, and that's where the next Fibonacci level is, that that Fibonacci confluence zone is right there. If the market comes here and starts to fall down, you don't be surprised, because it can actually happen like that. But if it goes through this line, this trend line, then it can go up to the next level, which is this FCP zone, and it can keep on moving like that. So this is what we have on dollar index. This is FCP based, and this is more like trend line and wedges based analysis. So hope you enjoyed this analysis. If you did, make sure you hit the like button, and in the comment section let me know what you think about this analysis. And you're free to join our free Telegram group as well, because we have we keep on discussing about these sort of things, and I keep on publishing updates on not just the dollar index but other stuff as well. So you're free to join, and you'll find the link to that group in the description of this video. And I'll see you in the next one. Have a good time. If you're interested in learning how to analyze the markets the way I do using Fibonacci Confluence, then head over to Vikinsa.com, and under training section you'll be able to see Core Strategy Training Program. On this page you'll be able to see the testimonials of previous students, and also look at the brochure. The brochure has a lot more information, including the course structure and the Fibonacci Confluence Training Program curriculum. This is a very extensive program in which we cover basic core Fibonacci concepts along with the advanced concepts to analyze the markets with high probability. If you're interested in joining this program, come to Vikinsa.com, and under training section you'll be able to see and submit this form.